Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, buy the dip saves the day. The tech-heavy NASDAQ 100 rebounds as giants Amazon and Apple erase their losses. Meantime, a rout in Tesla has wiped out over $230 billion from the EV maker's valuation in the last 4 weeks. Plus, more than 150 chief executives urged Congress to pass President Biden's $1.9 trillion COVID stimulus package. Among those to sign that letter, Lyft co-founder and president John Zimmer. He'll join me coming up. And vaccines take flight. We are going to talk to the CEO of Zipline, the company that delivers critical and life-saving products via drones, now including vaccines. We begin, though, with a rebound in stocks fueled by dip buyers after an earlier bout of selling pushed the NASDAQ down 10% from a record. Our Ed Ludlow has the latest. Ed, walk us through the day.
Yeah, happy Friday, Emily. And that's right. You know, it's been a choppy day of trading to end the week. We started the day lower in terms of US equities because we got strong jobs data that kind of set in motion some concerns. The economy may overheat. We might see an uptick in inflation beyond what we'd expected. But then this sudden rebound, really led by tech stocks. You see there the NASDAQ 100 up 1.6%. All told by the end of Friday's session. As you said, you nailed it. Indicative of buy the dip. Buyers coming into the market. The NYSE FANG Plus Index higher by 0.8%, a little more muted in its gains, but there's a reason behind that I'll come on to in a moment. And the Philadelphia Semiconductor Index up by 3%. In terms of some of the specific names on the move, well, this was all about big tech today. Gains in Microsoft, Google, also Intel and Apple having really strong days Friday as well. You know, these are the same stocks we've talked about every day for a few weeks being under pressure as yields have been rising. Investors have been jittery about big tech stocks that have stretched valuations. But ending the week on a positive note, if there's one stock that's definitely still under pressure, though, it's Tesla. Take a look at Tesla, down more than 4% on Friday. There's no real reason or rhyme here, just the same common theme, stretched valuation, maybe the idea that more competition is coming. You hear more progress from GM and Ford taking market share in the EV space, also these new names in SPACs. But look at Tesla's performance over the last 30 days. You said it, it's lost a hell of a lot of market cap in that time, down almost 30% over a 30-day period. It has got a high valuation. It has been under pressure in line with those rising yields and stretch valuations that we've been talking about. We also got some breaking news after the bell that I want to hit on. According to sources, Robinhood, which has dominated so much of the news flow in recent weeks, has apparently chosen the NASDAQ for a listing later this year. That's according to sources who say, of course, that no decision is final and that, you know, that situation could change. But according to those sources, last week, Robinhood was targeting a listing by the end of this year, potentially. It's been the center of the market volatility that we've been talking about for a few weeks now, all of the meme and Reddit traders that we've been talking about, some of those stocks, and of course had that high-profile hearing on Capitol Hill as well. So one to watch for the coming quarters.
Absolutely, and certainly interesting to note Robinhood still on track for going public, despite the controversy earlier in the year. Ed, look, we see a light at the end of the tunnel with the stimulus plan. Seems to be a lot of hope out there with the vaccine. Why is tech feeling all this pain?
Yeah, in short, the darlings of the pandemic are out. And those companies, those stocks which have suffered during the pandemic are starting to come in. Jump with me into my Bloomberg and look at this chart. It shows the percentage decline of the NASDAQ since its February 12 record. Now, a correction, a technical correction, is where an index falls 10% from its record. And you see that white line in the far right-hand side of the chart, the red patch. We were so close to that technical correction, but the picture really improved towards the end of the week. What's happening here is it's names like Peloton, names like Zoom. They have fallen 20% since February 12. They're really under pressure. Those were the favorites during the pandemic, with so many of us working and learning from home, exercising from home. But now what we see is investors really favor those stocks that would benefit from the end of the pandemic, a reopening, the successful rollout of a vaccine, things that see us out of our homes, back into normal lives. Can you imagine that, Emily? A normality ensuing. And what that means is that those darlings of the last 12 months in the tech sector are kind of less impressive now. There's less shine on them, and that's particularly true of Zoom. The big question with Zoom, of course, that has seen such massive growth is what's going to keep that growth going? If we all return to the work and we all return to schools, do we still need to video conference with each other? Zoom thinks so, but the market definitely has questions, and it's putting its money into the reopening of the economy. Emily.
We all want to know, Ed, what new normal looks like. Thank you for trying to give us a picture. I want to stick with the tech sell-off, bring in Dan Ives of Wedbush Securities for more. I want to start with Tesla. Dan, I'm sure you heard Ed there saying there's not much rhyme or reason. What reason do you see that Tesla could be down so much over the last few weeks?
Yeah, I think it's a combination. One, you're seeing a risk-off, which is across tech and EV. And Tesla being the poster child for momentum, you're seeing, a lot of that momentum come out of the name, and it really doesn't have valuation support from a traditional perspective. But I believe this is short-lived. I mean, you look at January in China was a bit choppy, but we think that's going to be robust the month of March. And this is a company that is in the midst of what's a golden age of EV. Across the board, $5 trillion next decade. So I still view this end of the year, this is a $1 trillion market cap, despite these white knuckles and just this very painful sell-off we've seen over the last month.
What about the sell-off more broadly? Do you think that's also short-lived, or are we at the beginning of a longer-term correction?
And my view is that tech stocks are up 30% this year from where we are today. And I think this is one where from the 10-year, the rotation, worries about valuation. I view this as just we're talking about something that's more of a correction rather than the start of a more structural trend. I think when we look at tech and we look at the $2 trillion that's going to be spent digital transformation, you look at cloud names like a Microsoft, a DocuSign, cybersecurity, Zscaler, and then, of course, you look at FANG names with Apple leading the charge. And I think this is one I view it as a golden opportunity to own these names. And even though it's a buckle the seatbelt moment, in my opinion, it's a bright green light to own tech, despite many on fire in a crowded theater.
What are the specific names that you think could benefit more as we come out of the pandemic? Because there's an argument to be made that a lot of these tech companies benefited because of the pandemic, because of lockdown mode. And then do those benefits subside once people do get back to new normal?
Yeah, it's a great question. I think that you have to separate some of the Zooms and the Slacks and the Citrix versus what's really going to facilitate the digital transformation. Even in a hybrid type of environment, there's companies, especially on cybersecurity. I think that's really front and center that I put an asterisk around. Names like Zscaler or Palo Alto, SailPoint, Varonis. These are names that we're more and more, especially with 30 to 40% working remote potential over the next few years. Cybersecurity from enterprise to consumer, that's going to continue to be just a massive area of spend. And I also think consolidation is going to be front, and I expect an M&A spree in cybersecurity.
M&A in cybersecurity. We've also seen M&A in enterprise tech more broadly with Salesforce buying Slack. We've been covering Okta's acquisition of Auth0. Can you give us any more specifics about where you think deals will be done?
Yeah, well, besides cybersecurity, I think on core cloud is where you're going to see. I think Microsoft's going to get a lot more acquisitive in terms of on collaboration and specifically on other areas across the food chain. I think you're going to see the same thing from other strategic players in SAP and Adobe, but then also financial buyers as well. And that's why the one thing I'd say, these stocks sell off. Every strategic and financial buyer is out there looking at some of these names. So the one thing that's important is that I believe there's strategic bids that put a floor in tech. And if the investors sell these off more, I think it's just going to accelerate this M&A spree that we see. But it comes down to, I think street numbers are 10 to 15% low relative to where numbers are going to come out. And it's a valuation re-rate still in the middle innings of what I view as a 2 to 3 year bull market.
All right, Dan Ives of Wedbush Securities. Always good to have you. Thanks for helping us round out the week. Coming up, Lyft getting a pickup of its own, with the company seeing its best week since the start of the pandemic. We're going to speak to co-founder and president John Zimmer. Coming up, this is Bloomberg. The ride-sharing company Lyft is getting a lift of its own. The company reporting its best week last week since the start of the pandemic in what they hope is a sign of rider demand returning and a shorter road to profitability in 2021. The company also updating its prediction that ride volume would fall only 1.2% quarter over quarter as opposed to 4%. Lyft managing to skirt the recent tech sell-off with shares up over 10% since the start of this month compared to other related stocks. You can see feeling a lot of pain there. Joining me now for more, John Zimmer, Lyft co-founder and president. John, I want to ask you about the stimulus plan, first of all, which you signed a letter in support of. Why are you supporting this, and what would this mean for Lyft and your customers?
First, I think it's the right thing for the country. It's widely popular across the country. Many people, especially those in vulnerable communities, have been hardly hit by the pandemic. And it's time to go big for the rebound. People need the help and support, and the economy does. And so obviously that is, Lyft as a recovery stock is demonstrating to be a guider on how this is going to turn out. Obviously we're up as the economy is starting to come back, but there's a lot of work to help people that have been hit the hardest over the last year.
So give us some color on the trends you're seeing in terms of the return in demand, and when could we see a return to pre-COVID levels?
Yeah, we saw from January to February rides up about 4%. We're not going to predict exactly when things will come back to pre-COVID levels. Obviously, with every vaccine that an individual gets, it's someone that is more safe and comfortable getting out in the real world. And Lyft is at the center of that. As people get back to economic activity, they're going to need to get around to do that.
So how much sooner could profitability be than perhaps you had thought?
Well, we've told everyone that we will hit it this year. We said that if things go well, we could potentially hit it by Q3. But some of this is, or much of it is not directly in our control with the distribution of vaccines. Every time we see news that the vaccine deadline for every American having access or every American adult having access move forward, that is beneficial to society and to our business.
We're seeing a huge potential population redistribution that could be long-term. What does the shift to the suburbs mean for Lyft and the rebound that you want to see?
I think it's a little overstated that cities are going to, be dead in a sense. We think cities are going to continue to be extremely popular, and there's all different types of cities. I think kind of more second, medium-sized cities are going to have a really large resurgence. And I think the big cities will be healthy. They offer a lot. I've lived in New York, I've lived in San Francisco. These are phenomenal cities with a lot to offer. But as things get rebalanced, everyone across the country needs transportation. And if traffic is horrible in the largest cities and some of that gets rebalanced to smaller cities, that's actually good for society and the business, because traffic and the mismatching of supply and demand doesn't help our business either.
Now, as much as you're hoping the administration will get this stimulus plan passed, Joe Biden's administration also scrutinizing big tech, and Press Secretary Jen Psaki sort of doubled down on that objective today. Take a listen to what she had to say.
The president has been clear on the campaign, probably more recently, that he stands up to the abuse of power, and that includes the abuse of power from big technology companies and their executives.
Curious what your reaction to that is, John, and if you consider Lyft to be part of big tech or one of the little guys that's trying to disrupt big tech.
I think the statement is very fair. I think whether it's in business, whether it's in any organization across the country, power is in the hands of people that need to be accountable. And so I'm 100% fine with that comment. In our industry, we've seen competitors get out of hand with certain power. And so we hold ourselves accountable. And so as we get larger and we grow our business, more responsibility on our shoulders. I have no problem with that.
What kinds of things could the Biden administration do that would really make a difference for you, whether it's has to do with autonomous cars or electric cars?
Yeah, I don't think it's about stopping progress or, holding companies accountable. Is understanding all the implications of companies operating and how they're operating. In our case, what I'm excited to work with the administration and local governments on is how that we can provide a growing safety net of benefits that are portable, that drivers can take from job to job. The way people work today is different than they worked decades ago when labor laws were written. So it's an opportunity to work together. I've tried and I've talked about before. Let's work together with labor. Let's work together with the government, and let's benefit the constituents, in our case, the drivers and riders. When you look at infrastructure, which I'm guessing will be, a big way to grow back better, whether that's the highway infrastructure, the future of our city's infrastructure, or the way that we're going to invest in more of a green and sustainable infrastructure, we can play a very big role in that. We've committed to all electric vehicles by the end of 2030. I want to work with government to make that happen that fast or even faster.
Now, on the subject of electric cars, you do have a green mode, and I know you're working towards getting to 100% electric cars on the network. People can use green mode to actually summon or request an electric car. Uber is now paying its EV drivers $1 extra a ride. Is that something you might consider doing?
Yeah, we've looked at that. I think there's something you can do even bigger about distributing from gas vehicles at no cost to driver, but making gas vehicles more expensive than electric vehicles. There's a lot you can do to incentivize it. I think the number one thing that needs to happen first is there needs to continue to be lower cost EV models that come out, which is going to be true over the next couple of years.
All right. John Zimmer, Lyft co-founder and president. Always good to have you here, John. Thank you so much for joining us on this Friday. Okay, coming up, we're back with Jared Isaacman, the 38-year-old billionaire who's set to man the first civilian space flight. We will recap his company's earnings and take a look at one new industry he's diving into next. This is Bloomberg. In an industry dominated by PayPal and Square, payments processing company Shift4 Payments is carving out a niche for itself among restaurants and hotels serving over 200,000 businesses. Its latest earnings report included strong guidance this year, as well as the acquisition of VenueNext, which will help push it into the sports stadium, entertainment venue, and theme park sector. For more on the results, CEO Jared Isaacman, who just happens to be leading the all-civilian SpaceX Crew Dragon mission later this year. Jared, good to have you back with us. I want to start with earnings. What do the results tell you about consumer behavior and how things will change as vaccines continue to roll out this year when it comes to buying on e-commerce?
Oh, and thank you very much for having me. And it's a really great question. So honestly, we just reported our 2020 earnings, which, payment volume was up 10% year over year, but that is much more of an indication of the share that we've been, successfully able to take in the market, as opposed to some of the recovery results, which you don't really start to see until really this current quarter. And that's why we also shared volume data or payment volume data in January and February, where you were starting to see some real significant year over year volume growth. In fact, the last 2 weeks of February, 7 of the 8 highest volume days in our company history happened during that time period. And if you recall, you had Texas without power. You had some really significant weather that paralyzed a good portion of the country. So even under difficult circumstances, consumers were getting out and re-engaging in commerce. And we definitely attribute that to vaccine restoring, the vaccine proliferation restoring some consumer confidence.
Right. So you're getting into the stadium app and concessions technology market with this new acquisition of VenueNext. Why do that when we're in the middle of a pandemic and not many people are going to the concession stand right now?
Well, it's a good question. There's a lot of answers to it. So for starters, there's been some stadiums that are still standing like, a few thousand years later. So we're really confident that the market's going to come back and people are going to want to go back into the stadium environment and, support their teams and visit concession stands and such. But why would Shift4 choose to enter it? So we have 200,000 customers. We have about 35% of the restaurants and hotels in the United States use some form of Shift4 payment technology. And where we really excel is in the most complex ends of commerce. When you have multiple different types of software that comes together and needs to be networked together to deliver a really efficient experience. And what we found in stadiums is it's very similar to resorts. You have ticketing, you've got restaurants, you've got bars, you've got in-suite ordering, and that is an attraction to us because we like solving and simplifying, complex forms of commerce. So we had Raider Stadium, which we announced last year, and then we acquired Venue Next so we could deliver a really vertically integrated experience to the sports and entertainment market.
Right. All right, I got to ask you about the latest SpaceX launch. I know you congratulated Elon Musk. Of course, we saw it land and then explode. Curious if that makes you at all a little more nervous or terrified. I know you said you're not scared about going to space, but what your reaction is to that.
Okay, so important to keep in mind, we're talking about two different types of rockets here. So I will be going to space later this year with 3 other crew members in low Earth orbit, and we're going to do it on a very reliable Falcon 9 rocket. In fact, it's been certified by NASA for human spaceflight. It's the only NASA-certified human rocket in the United States, and it's the first time we've been sending human beings back up into space from U.S. soil in nearly a decade since space shuttles retired. These are the rockets that you're seeing do those cool self-landing tricks on ships in the water. So, super reliable technology. I'm hyper confident in it. What we saw, explode a few days ago, now that's Starship. Now that's not taking us to low Earth orbit. That's taking people many, many years from now to the moon and Mars and beyond. That's a brand new developmental rocket. And people at SpaceX are cheering when they see it explode because they know they're getting good data. They're failing fast so they can make progress and get like human beings, to another world and beyond in the near future. So 2 different programs, but both equally exciting.
Well, I know that you announced that Haley Arsenault, a physician's assistant from St. Jude's Hospital, will be accompanying you on this mission. So we're excited to see how it all plays out. And of course, we'll be watching for more details and dates as you prepare to take off. Shift4 Payments, Jared Isaacman, thank you so much for joining us. All right, coming up, the world's first ever drone delivery of COVID vaccines. CEO of Zipline will be joining us next to talk about his company's effort to speed up global inoculations to fight the pandemic. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Drone delivery startup Zipline has launched its COVID-19 vaccine deliveries in Ghana, first in the world to offer this service. The company is flying hundreds of thousands of the AstraZeneca vaccines to hard-to-reach cities to help the government of Ghana ensure equitable distribution of the drug. Joining us now for more, Zipline CEO Keller Renato. Keller, thank you so much for joining us. So talk to us about the process. This is, I assume, an enormous logistical and technological challenge. How does it work?
Yeah, well, thanks for having me, Emily. And obviously now that humanity is kind of transitioning out of the development phase for the vaccine, we now face a new challenge, which is how do we distribute it equitably and quickly to the people who really need it? Ghana this week became actually the first African country to receive vaccine as part of the COVAX facility. And then in partnership with UPS and Zipline, they are delivering this vaccine instantly and autonomously out to thousands of different hospitals and health facilities throughout the country in the exact right dose, basically exactly when you need it and where you need it in order to reduce waste and ensure that people who live in rural areas get the same access as those who live in cities.
So how do you do it? I mean, I assume keeping them at the right temperature is one of the most important things. How do you keep them cold en route and make sure that when they arrive, they are ready to go?
Well, the neat thing is Zipline spent the last 4 years across Rwanda and Ghana serving thousands of hospitals and primary care facilities, delivering a wide range of medical products. A lot of those products are cold chain dependent or short shelf life or have really just sensitive handling requirements. So the infrastructure to deliver those kinds of products already exists, and it's something we have a lot of experience with. The way it's working today with the vaccine is that the vaccine basically lands in the airport. UPS transports it to either large hospitals or directly to zipline distribution centers. And then from those distribution centers, we package that vaccine into a small box that goes into an autonomous aircraft. That aircraft can fly out to any hospital or health facility within range of the distribution center. And we're able to do, today each zipline distribution center is able to do hundreds of deliveries a day of vaccines and also of lots of other products. It's also worth mentioning, just in the last year, Zipline delivered 1 million doses of normal vaccines, which are also, it's a little easy to lose sight of in the pandemic, but health systems have to keep doing all this stuff they were doing before, plus this new kind of vaccination effort.
Now, as I understand it, you haven't delivered or you're not delivering COVID vaccines in the US yet. Where are you in that process?
Well, as part of the pandemic, actually, we launched with a partner called Novant Health, which is one of the biggest, most innovative hospital systems in North Carolina. Over the last year, we've been delivering PPE products with them to frontline health workers by delivering from a central location to hospitals and health facilities. We think it's very likely that as other countries start to see the way that Ghana is using this technology in order to provide equitable access, they're going to follow suit. It's just, those discussions are still happening, and we can't speak for our partners.
What about Arkansas, where you do have a partnership with Walmart? Could we see vaccines be delivered there?
I would put it into the same. Walmart is actually in an amazing position, obviously, especially when it comes to delivering these services to people who live in the rural parts of the U.S. I just read an article yesterday talking about how pharmacy deserts, these are these areas where people live far away from pharmacies or hospitals in rural parts of the U.S. These are going to be the folks who are often most vulnerable to the pandemic and who are least likely to get vaccinated via traditional means. So a partner like Walmart that Zipline already has that really does an amazing job of getting to those rural populations is, it's really exciting. We can't necessarily announce something for Walmart today, but suffice it to say, we think that a lot of our partners are going to want to use the technology in the same way that the Ghanaian government is.
Well, we will be watching and waiting for news anxiously. You have overcome so many technological and regulatory hurdles to get to this point. Can you give us an update on the permitting status with the FAA?
The great news is that Zipline, we basically form a very close partnership with the regulator in every single country that we launch in. Today, Zipline operates in Ghana, Rwanda, and the United States, and we're planning to add a few more countries to that list before the end of the year. In every country, it's always it's a little bit of a give and a take. The U.S. has one of the most complicated airspaces in the world, and so we're currently operating under some exemptions. We're planning to transition to basically full-scale national certification of the system in the coming months. I won't bore people, but suffice it to say, I think the technology already operating at national scale in other countries is going to be operating at national scale in the U.S. way sooner than people would otherwise believe.
So give us then the longer term outlook on how you plan or expect to scale, not just in the United States, but around the world as regulations open up and as opportunity opens up and as more people and countries and governments get more comfortable with the service that you provide.
I actually would say that's already happening. We've seen over the last 4 years this go from people looking at it thinking, oh, it's totally science fiction, it's completely impossible, to now, government officials, regulators are just basically bringing themselves to existing distribution centers, seeing how it works, and then starting to think, okay, how would we use this to change our own healthcare system? The pandemic is obviously accelerating this because suddenly it's really, really important for every health system on the planet to figure out how to reach people closer to where they live rather than asking elderly or vulnerable populations to come into a hospital. And then most importantly, from a regulatory perspective, it's a lot easier to get regulatory approval for this kind of technology when every flight is potentially saving a life. We think that that's why healthcare logistics is the right place to start. And at the end of the day, Zipline's mission is that where you live should not determine whether you live. And so our goal in the long run is to build the first logistics system that serves all humans equally.
All right. Well, fascinating, huge milestone. And thanks so much for telling us more about how it's all working. Zipline CEO Keller Renato, thank you so much for joining us. As we were talking, we got some breaking news. California officials have just announced that theme parks and stadiums can reopen as soon as April 1st, as long as they meet local requirements and take precautions against COVID-19. Obviously, this is huge news for companies like Disney, Universal. We're going to talk about this a little bit more later in this show, but a reopening date of as soon as April 1st for theme parks and stadiums. More later in the show. Also coming up, we've seen big pushes for more diversity from the state of California. Also Goldman Sachs, even the NASDAQ to transform corporate America. Now word that President Biden will be signing 2 executive orders to advance gender equality. We'll talk about all of that with Boardspan CEO Abby Alderman next. This is Bloomberg.
On Monday, the president will sign 2 executive orders to advance gender equity and opportunity for women. He will also visit a veterans vaccination center with Secretary of Veterans Affairs Dennis McDonough.
Press Secretary Jen Psaki earlier today reiterating that President Biden plans to sign 2 executive orders on gender equality Monday, which is International Women's Day. This as large corporations have prioritized diversity efforts, cries that have grown louder since the Black Lives Matter movement. So how are companies doing now? Let's check in on the tech sector with Boardspan founder and CEO Abby Adlerman. Boardspan is a digital platform that provides resources for boards to assess and improve their diversity. Abby, very important work you are doing. I want to start with the California laws that have been pushing for this also to be a priority. Are those laws actually working and driving a real push towards more diversity?
You know, they are, Emily, and I think we have a lot to thank for the people behind those laws, like Senator Hannah Beth Jackson. Just to recap for your viewers, SB 826, which is about 1.5 years old, is the law around putting women on boards. And the more recent one, AB 979, is the new law around diversity for the underrepresented communities at large. It's a little early with AB 979 to see the results. It's more anecdotal. However, there is really clear, explicit progress as a result of SB 826.
So how does Silicon Valley, in your view, compare to other sectors? I mean, historically, women have been very underrepresented in the technology industry. There has been momentum to change, but is that actually happening?
Yeah, so with women on boards, you know, the number's gone up really impressively. It's a 66% increase since SB 826 was enacted. And the number of boards that have no women at all has declined from 30% to just around 2%. So that's pretty dramatic, right? That's really good progress. I think what people are looking for is, okay, that was meeting the 2019 milestones. The 2021 goals or milestones are a lot higher. So there's still a lot of work to be done, but at least it's a good, clear step in the right direction.
Now, a lot of companies, venture capital firms, for example, they've hired one woman in the last 5 years, and there seem to be no more. When are we going to see not just one, but multiple women at these companies, on these executive teams, on boards?
Yeah, I'm glad you raised that, because that speaks to 2 things. One is that is the brilliance of how SB 826 was written, so that there was this sort of near-term immediate goal to put, you know, some gas in the tank right away, but also it stretches out over a couple of years. And therefore, the goal of having at least one person on the board in 2019 now steps up to 2 or 3 people, depending upon the size of your board, in 2021. So by causing people to pay attention to that and keep going and not just check the box with one, I think it's really making the issue more systemic about the changes that we need to see. The other part of your point, though, is really important for people to understand that it is the venture capital community and sort of the tech entrepreneurial community that needs the most part of the work. Because in Silicon Valley, some of our biggest challenges are with the fact that there are smaller boards. And with those smaller boards, they tend to be less diverse because there's less room to bring on diversity to begin with. So that's where part of the challenge lies.
How concerned are you about women backsliding in the pandemic at these very high levels? I mean, there are concerns that women are doing a greater amount of caregiving, whether for children or elders through this pandemic, that some of them might never go back to work because of the burden that the pandemic has placed unduly on women. What do you think about that?
Yeah, I think it's a double-edged sword. It's a very real issue with women in the workplace at various levels, less of an issue at the most senior levels, the sort of C-suite, VP level, where they're being recruited presently to go on to boards. That said, if we don't think about the whole pipeline and how we keep people moving along entirely, it's going to have some backlash in a few years. So I do think it's a small concern, but something that can be fixed and addressed, partly by making sure we keep pulling people up, whether it's women and people from diverse communities, up through the pipeline, and also partly because the more diversity we have on boards, the more we've got people to help keep those doors open.
All right. Well, appreciate all the hard work you're doing to continue to raise the flag on this. Boardspan founder and CEO Abby Adlerman, thank you so much for joining us. And a programming note that on Monday, Bloomberg Technology will be dominated by diverse voices, including Kathy Wood, Zook's CEO Aisha Evans, acting FCC chair Jessica Rosenworcel, and Jacqueline Fuller of Google. Do not miss our special lineup covering all the news of the day on International Women's Day. And up next, is Reddit charting a path to the public markets? Why hiring its first CFO in 15 years could point to an IPO. That's next. This is Bloomberg. Word today that California ballparks and stadiums can begin reopening April 1st. That is good news as well for theme parks like Disneyland. With more on how this might unfold, Chris Palmieri, who covers Disney for Bloomberg, joining us now. So obviously this is huge news. They've been waiting for a date now for a year. Chris, what do we know so far?
Yeah, it's a whole year these parks have been closed. It's, really punishing for these companies and the people who work there. So, originally, the state had been saying they had to wait till the yellow tier, which is the fourth and least restrictive. Now they're saying, April 1st, if they're in the red tier, which is the second from the worst. And it's all directions are looking like that we're going to make it there. We're very, in Los Angeles, Orange County, where Disneyland is are very close to making it into that red tier. So all indications are it's going to happen April 1st.
So talk to us about what Disney is saying so far in terms of what it's going to take to get, to make that April 1st date. Obviously, I'm sure they've been preparing for this, but now that it's here,
there's
been
a whole back and forth. I mean, it got unusually ugly for Disney. Some pretty pointed remarks to the governor through this whole process. They've been open since July in Florida, and so in California, it's going to be with restrictions of initially be 15% of capacity, no indoor dining. You're going to have to make reservations in advance, and then they're only going to be local residents, so you really can't come from another state. And this is all being done because they are trying to control the spread. as much as possible. But this is all really a reflection, too, of Governor Gavin Newsom being under a lot of pressure. There's a recall effort. It's, the backers claim they have enough signatures to force, an election. And so he's been moving really swiftly now to reopen the economy. We saw a big push on his part this week for schools, and it seemed inevitable that these theme parks and stadiums, he really wanted to get baseball stadiums open by opening day.
I remember our last trip to Disneyland, Chris, and it seems like a lifetime ago at this point. You got a statement from Ken Potrock, the president of Disneyland Resort, saying we're encouraged that the theme parks can now have a path toward reopening this spring, getting thousands of people back to work and greatly helping neighboring businesses and our entire community with effective Disney safety protocols already implemented around the world. We can't wait to welcome our guests back and look forward to sharing an opening date soon. How much pent-up demand do you believe there is? Like on opening day, do you think people are going to be flooding the gates?
Look at this, Emily. They had just limited shopping last week, and supposedly there were 7-hour waits to get into the stores there. So, never underestimate the craziness of Disney fans. We're seeing in this a lot of places. There's a lot of discussion about this V-shaped recovery, the pent-up demand. People have been saving more money than ever, and the roaring 20s will be upon us. In fact, one of the reasons Disney eliminated the annual pass program at Disneyland this year is that they're really concerned about how many people are going to show up, especially with these limits, 15% capacity. Those reservations are going to disappear.
All right, Chris Palmieri, thank you so much. It's going to be an exciting month, charting the path to Disneyland reopening and many, many other parks, stadiums, etc. We'll be watching. Thanks so much for your reporting there. All right. It is a sign, meantime, that the world's most popular internet message board is potentially thinking about going public. Reddit has hired its first chief financial officer. Drew Valero's job will be to build out the company's financial audit and accounting functions. He was finance chief at Snap when that company went public. For more, I want to bring in Bloomberg's Brody Ford. Brody, is this really the first CFO ever at Reddit?
Yeah, 15 years. This is the first one.
That's hard to believe. So tell us why now and what we know.
Yeah, so as you said, most people see this as a step towards IPO, which is something Reddit's been talking about for years now. And even without the IPO, the company's been growing lately, and even before the GameStop frenzy. In the fourth quarter of 2020, the company saw a 90% increase in ad revenue, and their valuation right now sits at $6 billion after their largest venture round last month. So Reddit says they need a CFO to kind of build out their financial team and deal with all that, advertising revenue. And I think generally the company is positioning itself to become a larger and more mainstream part of the internet. They've been trying to shed the image that they're home to, extremist or racist content. They've been increasing their content moderation. And they also acquired a video app called Dubsmash, which is a TikTok competitor that's known for highlighting creators of color.
So tell us a little bit more about Drew Valero, other than the fact that he worked at Snap.
Yeah, as you said, he is best known in the tech world for leading Snapchat's IPO preparations when he was CFO. He likes to tell this story about showing up to Snapchat and they had no general ledger, never created an income statement, but 18 months later, they had a $20 billion IPO. So it's not hard to see why this is his reputation and why many are seeing his appointment as a sign of the IPO. Before Snapchat, he worked at Mattel, the toy company, for 15 years. He had long stints at Taco Bell and Yum Corp before that. And for the last 2 years, he's been CFO over at Allied Universal.
So when could an IPO be, and what do we know about Reddit's revenue?
Yeah, in terms of IPO, in a recent New York Times interview, CEO Steve Huffman said that there's no real timeline, but it's, something they're working towards. As far back as 2017, Huffman was saying that the IPO was inevitable and could come as soon as 2020. And on the revenue front, maybe it's a hint that they're releasing more numbers, right? They gave good numbers on revenue growth in advertising in the fourth quarter. So we will see.
All right. Well, much to continue to follow. And of course, Reddit's role in the rise of retail trading, Bloomberg's Brody Ford. Thanks so much for joining us. And thank you all for watching. That does it for this edition of Bloomberg Technology. Remember, we've got a big special show coming up on Monday, International Women's Day, with a blockbuster lineup of power women covering all the news shaping the markets in tech. We'll also have the much sought after ARK Investment Management's Kathy Wood, whose ETFs are some of the most watched on the street. Can't wait for that show. Tune in Monday, Wall Street Week with Bloomberg's David Weston coming up next. This is Bloomberg.